Hello students, welcome to chapter 4. So in this chapter, we will discuss income statement, cash flow statement and profitability analysis. So chapter 4 has three parts: income statement, cash flow statement and profitability analysis. But in this part, meaning in today's lecture, we will cover the part 1, income statement. So we know that in the income statement we record the revenue and expense. Okay, so today we will be discussing income statement and we will solve some problems. Okay, so let's know some of the terms: operating income versus non-operating income. Okay, so the first one is operating income. So I think that you know the basic things, the difference between operating and non-operating income. So think about Apple. When Apple sells iPhone, okay, the revenue that is generated by selling iPhone by Apple is operating income. And other than that, the other income, say for example, if iPhone, meaning Apple, lends some money, say 500 million to some parties, and they are earning interest from the money that they have lent. So that is interest revenue, okay, and that is not operating income. So operating income includes revenues, expenses, losses and gains that is directly related to the primary revenue generating activities. So that what I was saying, that the primary revenue generating activities, so which is the sale of iPhone by Apple. So that is why the operating income for Apple is the sales of iPhone, which is the primary revenue generating activities. Okay, and the non-operating income includes the revenues, expenses, losses and gains that is related to peripheral. See that the term is peripheral or incidental activities. Okay, peripheral or incidental means sudden. This is not regular. This is not the regular income generating activities of the company. So that is called non-operating income. So the Apple's interest revenue from lending money is the example of non-operating income. Okay, so let's know about the comprehensive income. So comprehensive income, we know from our income statement concept that revenues minus all the expenses, meaning operating expenses, is equal to net income, and plus minus other comprehensive income, then we find the total comprehensive income. So comprehensive income, meaning total comprehensive income, is equal to net income plus other comprehensive income. Okay, OCI, other comprehensive income. Okay, so we will discuss about the other comprehensive income later. And so that income statement, which is also called the statement of operations or statement of earnings, reports the company's profit during a particular reporting period. And the comprehensive income, meaning other comprehensive income, includes a few types of gains and losses that is normally excluded from the income statement. Okay, that doesn't that is not shown on the income statement. And the statement of cash flows provides the information about cash receipts and cash payments. Okay, and this is an example of income statement. See, we can see that income from continuing operation, and this is the discontinued operations, and this part speaks about the earnings per share. Okay, so income from continuing operations, the revenues and expenses. So reports the revenues, expenses, gains, and losses that have occurred during the reporting period. So revenues are the inflows of resources resulting from providing goods or services. If you sell goods or services, you are receiving revenues. And expenses are the outflows of, meaning outflows. Money is going out. Okay, money is going out of resources incurred while generating revenue, and it represents cost of providing goods and services. Okay, so the causal relationship between revenues and expenses. So there is a common question: is it possible to establish a causal relationship between revenues and expenses? Yes. In that case, expenses are reported in the same period that the related revenue is recognized, and know if the related expense to a particular period, allocate it over several periods, or expense it as occurred. So for example, let's have an example. Say we have purchased an equipment, and the cost of the equipment is $1,000, and the useful life is 10 years. Okay, so for 10 years, this way, so think that this is the 10th year, this is first year. So every year we are utilizing $100 amount of the equipment. Okay, so it means that we need to allocate this $100 every year. Okay, and this is the expense allocation. Okay, so income from continuing operations, gains and losses. So gains and losses, say the increases or decrease in equity from peripheral or incidental transactions of an entity. For example, the sale of an equipment, building, or other operating assets for an amount that is different from their recorded amount results in gain or loss. Let's have an example. Say, for example, we have an equipment. Okay, the cost is 1,000, and accumulated depreciation is say 800. Okay, so 200 is the book value. Okay, 200 is the book value. Okay, if we sell this asset for, say, if we sell this asset, I mean this equipment, for $300, okay, then we will have a gain of $100. Okay, but if we sell this asset for say, for example, $100 only, then we have $100 amount of loss. Can you see that? This is how we calculate the gains or losses. But see that selling equipment is not the normal operation. Okay, think about the example of Apple. Apple usually generates revenue by selling iPhones, correct? And when the Apple is selling its equipment, this is peripheral, incidental activity. Okay, so the gain and loss is recognized by selling assets. Okay, so this is an example of income from continuing operations. See that income from, so we can see sales revenue, cost of goods sold, gross profit, operating expenses, then total operating expense, and then non-operating items, and So income taxes. Finally, we have the income from continuing operations. Okay, and it's an example of Sherwin Williams Company's uh, statement of consolidated income. So we can see that this is an operating income, and this is income before income taxes. This is income tax, and finally we get the net income. Okay, so this is another example of single step income statement. Single step income statement is easy because in the single step income statement, see, we are recording all the revenues first, okay, and then all the expenses, okay, but we are not classifying the revenues and expenses. Okay, see, there's no classification of income from operation or income from non-operation, something like that. So this is called single step income statement. Okay, and finally we have the net income, and the same income statement we can prepare in a classified way. So in that case, see the example, the same thing. We can see that sales revenue less cost of goods sold, gross profit, and then say that operating expenses, so operating income, then other income or expense, and finally we have the net income. See that? So this is how we classify. So we will solve some problems based on this one. So, and the difference between US GAAP, meaning generally accepted accounting principles, and IFRS, International Financial Reporting Standards, the income statement presentation, no minimum requirements in case of US GAAP, and Securities and Exchange Commission regulations require expenses be classified by function. So this is really important. Say that this item is really important because when you are submitting the 10K files, meaning which is the annual file, or say 10Q file, which is the quarterly file, you need to classify the expenses by their functions, and the bottom line of the income statement usually called either net income or net loss under the US GAAP. And under the International Financial Reporting Standards require certain minimum information to be reported on the face of income statement, and it allows expenses to be classified either by function or by natural description. See that, and bottom line of the income statement is either profit or loss. So the difference between these two is net income or net loss and profit or loss. Okay. So the discussion is up to this, and let's solve some problems. Okay. So now let's solve some problems on the single and multiple step income statement. So from this problem, we will prepare the single step and multiple step income statement. Okay. So the problem reads something like this: say the trial balance of Lakewood Incorporation included the following accounts as of December 31st, 2018. So we have the sales revenue, interest revenue, gain on sale of investments, cost of goods sold, selling expenses, write-off of obsolete equipment, interest expense, general and administrative expenses, and the company had 100,000 shares of stock outstanding throughout the year, and income tax expense has not yet been accrued. The effective tax rate is 30%. Okay, what we need to do, we need to prepare the single and multiple step income statement. Okay, so let's start over here. Okay, here we go. So the first one, which is the single step. So in the single step, as I said earlier, that in the single step income statement, we will sum up all the revenues first and then all the expenses and subtract the expenses from revenues. Then we will find the net income. Okay, so the first one is sales revenue and gains. Okay, so the sales revenues, sales revenue is equal to what do we have? 1,800,000. Okay. So what we have here, now it's okay. So sales revenue, then we have gain on sale of investment. We can see that the gain on sale of investment. So we will sum up all the revenues and gains. So we have written the sales revenue, then gain on sale of investment, so which is 50,000. Okay, and then then we have the interest revenue. We have another revenue which is interest revenue, that is 80,000. Yeah, we can see that this is the 80,000 of interest revenue we have. So let's sum up all the revenue. So I'm just using the underline. So we can use the auto sum. Here is the auto sum. This one is our total revenues and gains. Okay, so let's make it a different color so we can easily understood. Okay, that's all. So total revenues and gains we have, and now expenses and losses. Okay, so the first expense is cost of goods sold, which is, say, that is 1,100,000. Okay, why should not be? So 100,000 cost of goods sold. Then we have selling expenses, that is 120,000. Then we have general and administrative expenses, which is 200,000. Then we have you can see that general and administrative expenses, and then we have interest expense, which is interest expense. You can see it is 40,000. Okay, then we have write-off of obsolete equipment. You know that what is write-off of obsolete equipments? Obsolete equipments means, say for example, you have some equipments in your company, but you cannot use them, or they have become so old. Think about iPhone 4 nowadays, where you have the iPhone 12 in the market, but you have an iPhone 4. Okay, it may not work. So that is an obsolete item. So you are writing it off, and it is an expense. Okay, so it's an expense. So what we do? Okay, what I'm going to do? 1, 2, 3, 4, 5. So some of these. Let's use format currency. Okay, so it should be so, but no, we need to use currency. You can see that. But when I'm using the currency, it should give me a dollar sign. So that is what I am expecting. So I'm using the currency. Okay. So here I also use currency. Correct. and the first one should also use currency. So currency. Okay. So the dollar sign. So what we have now, this one is total expenses and losses. Okay. Let's make it a different color. So this is the total expenses. Okay. So let's subtract total expense from revenue. That should be equal to revenues minus, oh sorry, what is that? So this one is D16. Okay, so equal to D9. So D9 minus D16. Okay, this is our income before tax. Let's write income taxes. Okay, income before income taxes. And now less income taxes, and the rate is 30% is given. So what is that? So it should be equal to, see, this one multiplied by 0.3. See that this one is our income tax. So after subtracting, so see, this is our income before income taxes, which is D17, and this one the tax is D18. So D17 minus D18. Oh, here you go. So this one is our, okay, this one is our net income. Okay, so I am giving this one a different color, so it should be, okay, no, this one is too dark, so let's use a light color. How about this one? Yes, this one is good, this one is better. So this is the closing. No, so this is the closing. So, and now it is asking, let's calculate the earnings per share. So earnings per share means we have total 238,000 net income divided by, we have 100,000 shares of outstanding common stocks. So this one. So what would be the earnings per share? That is EPS. It is 2.38. Correct? Yes. So it should be 2.38. Right. 2.38. Okay. Oh, we should use currency, and okay, now it is showing. So this is our past problem we have solved, and then we will be solving the second one. Okay, so we have solved the single step income statement here. So we have solved the single step one, which is actually all the revenue and then all the expenses. But in the multiple step income statement, so this is a multiple one. So in the multiple step income statement, what we do, we will classify the expenses based on their functions. Okay, so let's start. So first one, sales revenue, which is 1,800,000. Then there's cost of goods sold, which is 1,100,000. Okay, so after subtracting, let's use all of them as currency. Okay, right, should be currency, correct? Okay, so okay, After subtracting the cost of goods sold, what we have, gross profit, so which is equal to this one minus D5 minus D6. Okay, so this one is our gross profit. So let's make a different color step by step, so it will be helpful for us. This one is our gross profit. Okay, and now let's operating expenses. And what are the operating expenses? So selling expense, then selling expense total is 220,000. Okay, so let's make this one as currency, so that we can use the dollar sign. It should be, let's see. Okay, so this is dollar sign. So selling expense, then general and administrative, expense 200,000. Then we have write-up of obsolete equipment. Okay, so the obsolete equipment, we have 30,000. Okay, so underline this one, and it should be equal to this one plus this plus this, so 450,000. Okay, so total operating expenses is 450,000. So after subtracting this operating expense from from the gross profit, if we subtract the operating expense total, so we will have the operating income. So that should be equal to see, this is our D3, so minus D8. Okay, it's equal to D3 minus D8. But no, see, D3, sorry, D3. There is a font problem in my computer, so there is a problem. Sometimes it shows me the 10 bar English. Now I do the US one, so D8. Why? D3 minus D3, yes, D3 minus. Okay, what's the problem? It should be D3 minus D8. So yes, okay, let me use this one minus okay, let me write it down. So 700,000 minus 450,000. Okay, it is 250,000 now. Okay, this is, sorry, operating income. Okay, so we have this one, operating income. Now other income or expenses. So that is, first one is the gain on sale of investment. that is 50,000. Then we have interest revenue, that is 80,000, and we have interest expense. So to write the interest expense, we use the first bracket parenthesis. So see that it gives us the negative sign. So underline this one. So it should be this one plus this one plus this one. Okay, 9,000. So this is our total other income net. It means that we have subtracted the expenses from the other income, so that is why it is net. So this one. So after subtracting the total other income, or subtracting or adding, we have the income before income taxes. So it should be this one plus, so this D13 plus that is actually D9 plus D14. Why I'm getting 0? I'm not sure. Okay. So this is gonna be 50,000 plus 90,000. 340,000, that is income before income taxes. Okay, less income taxes. The rate of income tax is at 30%. Okay, so it should be equal to 340 multiplied by 0.3, 102. So after subtracting this one from 340, so let's type 340,000 minus 238. So this is our net income, and earnings per share would be again, so 238,000 divided by 100,000, so it should be equal to 2.38. Right. So yeah, we need to format this one. We need to use, okay, so this one. So this is how we prepare the multiple step income statement. See that we have classified the expenses and revenues based on their functions. Okay, see that we have operating expenses, the total operating expenses, then operating income. Okay, then we have other income or expenses. So let's make it different color. So this is how we prepare the multiple step income statement. Okay. So now let's solve a second problem. So in this problem, we are asked to prepare the partial income statement. So we are given the income from continuing operations before income taxes 110,000, gain on disposal of discontinued component 28,000, loss from operations 50,000. So and it has 30% tax rate. So what we need to do, we need to prepare the partial income statement, and let's see how we do that. So first one, we are starting with, it will save us some time. That is why I'm not writing over here. So income from continuing operation before tax is 110,000. Then the tax rate is 30%. So this is the 33,000. Meaning 110,000 30%. So income from continuing operation is this one. Okay, so let's make it a different color again. So this one, and then discontinued operation. What do we have? See, we have a loss of 50,000 and gain of 28,000. So the net loss would be, so 50,000 minus 28,000. The difference would be our net loss. So that is what we have done over here. So it is let's see. So minus 22,000, and for this 22,000 loss, we can have the tax benefit, income tax benefit at the rate of 30%, that is 6,600, and the difference between these two is our 15,400. So loss on discontinued operation. Okay, and the difference between this one and this one is 61,600. Okay, this is, and now let's go to solve the problem number 3. This is very important because there is similar problem in your connect assignments. Okay, so let's see the problem over here, and then we will solve this one. Okay, so this one, say the Chance company had two operations, operating divisions, one manufacturing equipment and the other one is office supplies. So both divisions are considered separate components, and the firm equipment component had been unprofitable, and on September 1st, 2021, the company adopted a plan to sell the assets of the division, and the actual sale was completed on December 15, 2021 at the price of 670,000. The book value of the division's assets was 1,150,000, resulting a before tax loss of 480,000 on sale. Okay, and the division incurred a before tax operating loss from operations of 120,000 from the beginning. Okay, through the year December 15, the income tax rate is 25%. The some companies after tax income from its continuing operation is 620,000. Okay, prepare an income statement for 2021 beginning with income from continuing operations, then incorporate EPS disclosures assuming 100,000 shares of common stock. So let's see how we solve this one. Okay, this is how we solve this problem. I will explain to you. Okay, so the first one is, I hope you can see this one. Let me make it a little bit bigger. And this one is smaller. So, okay, so it is better now. See that how we have started. So we started with income from continuing operation, that is 620,000. Okay, 620,000. This one. Okay, 620,000. So then discontinued operations. Think about that. So loss from operation of discontinued component, that is 600,000. How do we get that? So go to the explanation here. So loss from operations 120,000. See, we can see that there is a loss from operation, that is 120,000. Okay, and the other one, loss on sale of assets, that is these 480,000. Okay, let's make different colors, 480,000 and these 120,000. Okay, so these two, so which are equal to 600,000 of loss from operations of discontinued component before tax. So we have loss from operation 600,000. That is why it has a negative sign, you can see. And the tax benefit on this 600,000 at the rate of 25% is 150,000. Okay, so the difference between this one and this one is 450,000 negative, because you know the negative is 600,000 and positive is 150,000, and the net income or loss would be 170,000. We have subtracted this 450,000 from 620,000. So we have this net income from, okay, this is continuing operation. And earnings per share, how do we do that? So income from continuing operations, uh, what do we have? 600,000 multiplied by, no, it should be actually 620,000, because this is income from continuing operation. Okay, 620,000 divided by this 100,000 shares, so that is 6.2. And loss from discontinued operations. Okay, loss from discontinued operation is this 450,000. See, so divided by 100,000, that is $4.5. And the difference between this one and this one is 1.7. So net income per share would be $1.7. This is how we record. Okay, so be careful about that. I will upload this solution online as well. Okay? And problem number 4, we have a multiple step income statement. We need to prepare for this one. So let's go to the solution. Over here we can see that what I can do this one. Okay, it's better now. See, we have revenue and gains. This is single step actually. Sales, interest, dividends, gain on sale of investment, total revenue, then other expenses and losses, blah blah blah. So earnings per share. This. So it's very simple. So sales revenue, then okay, cost of goods sold, and this one is gross profit. And operating expenses, selling expense, administrative, restructuring cost. So total operating expense is this one. Okay, so after subtracting the operating expense from the gross profit, we have the operating income of 58,000, and other income or expenses. So interest and dividend, interest expense. This is the income. This is the expense. That is why the minus sign. Gain on sale of investments, so positive. So the net of these three is 92,000, and income before income taxes. This one, income tax is 60,000. That is 40% of 150, and net income is 90,000. See, earnings per share is 0.9. Okay, I hope you enjoyed this one. So thank you so much. Have a good one.